What's going on, guys? Jay the Trader here. Today's video, I'm pretty much going to show you guys how to properly, use implied move trading. So pretty much what trading implied moves is, it's a type of quantitative trading strategy or style. So what is quantitative trading? I mean, you can type quant trading here. And we can just see the basic examples. So quantitative trading, or also called quant trading, involves the use of computer algorithms and programs based on simple or complex mathematical models to identify or capitalize available trading opportunities. So it also involves research work on historical data with the aim to identify profit opportunities. So again, they use automated trading or math, which is the biggest skill or biggest key. And that's pretty much what we're gonna use here. So trading implied moves, you pretty much can use this on any ticker. I'm going to be showing you guys an example on the futures chart here. But I will show you guys how you can apply this to any ticker and pretty much allow or trade it and add it to your arsenal. This strategy does not interfere with any indicators that you use if you aren't a beginner trader, but you're rather seasonal. So if you do have, your own set of indicators, such as like TTM squeeze that, tend to use and whatnot, I think just having those indicators will help the strategy be even more accurate to your liking. But the strategy can be used without any indicators. So, I mean, let's get right into it. Now, if we're looking at the futures, normally I like to look at, since futures obviously don't close, I'll try and identify a preferred trading range here on the futures time frame. So I already did the setup here, but what I like to do is I just like to look from the hourly or the daily, right? If the daily doesn't have enough information that I like, so this daily doesn't have enough information that I like as far as our previous trading range from our last week. So I'll use the hourly to the 4-hour time frame in this setup. Now, what I'm doing here is I'm just looking with my naked eye where his price rejected and caught itself majority of the time from resistance and support, right? So just off my naked eye, I had identified that 3641.50 was its resistance area, and my 3618 was its support that it kept bouncing off of. So I marked those two as its trading range. Now, here's how this works. After you identified your trading range, you then want to subtract the range, your upper range from your lower range. You want to subtract those two numbers. So you subtract 3641.50 from 3618, and for your upside, or for the value, I believe it's 23 and a half. So we're expecting a 23 and a half point move. So 23.5, I believe that's the value. Now you take your 23.5 and you add it to the upside range. This is if you want to get that upside target. You're going to add that 23.5 points to your upside range. So if price breaks above 3641.50, roughly 3655 will be our target based on our mathematical outcome, right? Our mathematical value. For the downside range, you want to take that same 23.5 move, 23.5 points, and subtract it from our downside break, which is at 3618. And we'd roughly get around 3594.50. If I'm not mistaken, I think it is marked 75 just because I don't have it intricately marked, but 3594.50 would be your mathematical low if it broke that set range. Now, you may be wondering, what are these red lines in between these? Well, we obviously know that there is going to be resistance if price breaks out to get to that upper range, and there's going to be some support to catch itself if price tries to break down to get to that lower range. So the way I've identified that to help with this guidance to either level is I go on my weekly frame and I like to identify the wicks and the bodies of, previous trading times. Um, Now, I've done that here within the range. The beauty is you don't have to mark all of them. You can just save yourself the time and only mark what you see within a range. If price ever breaks out of the range, I mean, that's just you leaving profits on the table. You're not too worried about that. So within the range that you've identified as far as your target for the upside and downside, we're looking for, is there any, clear resistance level that I haven't spotted that, may be in a way to my target. Now, from our upside push, we do have a body here that I identified. And then I think I identified another body here. Yeah, there's a wick here that I also identified. And I believe I missed one right here that I'm going to identify. So there is some resistance level getting to our target, but I should know that if we do break above that green line, which is our breakout of the upper range, we should get to that target. There will be some resistance to get there, but we should overall tap there. Now, these levels will hold some sense as we get on lower frames. Same thing goes to the downside. I'm staying within my range and I'm just looking where are any levels to catch price before, it gets to my downside target. I'm not really seeing anything in this previous. It's just wick, so I know that price can easily flush through here. However, there is a level that I'm not going to let miss up, and it's just right here. So I'm going to identify that, and I know that, okay, as we are falling down, price may catch itself right here before trying to eventually touch my lower target for the implied move. Now, again, why do we mark those levels on a weekly? Well, if we're taking this, from a day trading or swing trading point of view, again, this method works for day trading or swing trading. Scalping, not really. If you want to take it level to level, you could, but those levels are there because if I'm taking calls up here, say I take 3 or 5 calls or, more than one call, I can now trim at these resistance levels leading up to my target, and I will leave a runner running so it can potentially hit that target. It's the same thing for the downside. If I'm taking puts and I have more than one puts, I will then trim at this clear weekly level here because I know that price could potentially bounce there. And I will leave a runner running to see if we can continue to break down there and potentially tap our downside level. And then I'll, take all profits off the table. If it does break under and keep going, I'm not going to be worried because, again, the only thing that mattered to me was calculating my move based off of doing simple math. And I got my targets from the upside and downside. There's no need to get greedy because, again, we didn't predict anything outside of that range. Now, notice how the SPY is still staying within our range. This is very interesting, and this is actually holds more weight to, my thesis as far as if we do break out of that range, we should see a nice push upwards. That is a resistance area too, where price can easily catch itself from previously selling off heavily. And again, if we do break below that range, there really isn't any volume on this to catch it, if we look on bigger frames. So price does have room to dump if we do break below that lower range here. So again, you can use this on any other ticker, not just the futures, but the futures is a very crucial, ticker to learn how to trade. I use this on a ticker called AMD back on Friday. Oops, wrong one. So if we take a look at AMD here, and I just go over to our Friday trading day. So I identified, and you can ignore these green lines. These are just extra weekly levels that I marked. But if you look at AMD here, before Friday hit, I identified his trading range that it was in. Again, I took about 3 to 5 days worth of price action. So I went on my hourly time frame. Again, we're not including Friday here, but day one, day two, day 3, day 4, day 5. You can clearly see in those 5 days, even if you take day 6, it was in a clear trading range. The range was 67.96 to 63.42. Now, I did identify AMD being in this range on this date, the day leading up to Friday, because after it did break out, I was like, okay, is this going to continue breaking out or what's going to happen? And it did fall back within that range, so I identified it. Now, After I identified the range being 67.96 to 63.42, I came under the conclusion that, okay, AMD has a huge move that it could potentially make, because if I take 67.96 minus 63.42, that gives me a $4.54 implied move. Okay. Now, again, I have no indicators up, just using strictly price action. Now, my ranges are identified in pink, light pink. I did identify some weekly levels in between that range just to see what's going to happen with price. But at the same time, I did try to identify any downside levels after we did break out the range, and AMD only had one level that it was trying to catch itself at, which was 62.26. And if it didn't hold that, it was bloodshed. Because if you look at it, on a daily frame, there was no way it was going to catch itself from its previous trading history, which was over here. We can get a better view of it, I believe, on a weekly frame. Let's just flip over to a weekly. Yes, and if we look at AMD here, if it did break below that 62.26 level, as you can see, there was no way it was going to catch itself until that 59 points. So that also added up or matched up with my implied target. Now, with that $4.54 move, the implied downside, since that's what we're focused on, because obviously AMD decided to sell off, her implied downside move really was 58.88. I only did 59. I rounded it up to a round number because the market favors whole numbers. And at the same time, that 59 was also, again, a weekly support level that I identified from previous trading history. So I didn't want to get too greedy trying to play it in there. And I took it around 59. Now, obviously, AMD sold off more and closed out at 58. It's a new day in the morning. I did have to re-record this video because the old video didn't save with sound. But if you see, she's obviously at 57.60, dumping lower, obviously trying to go for that lower trend. And the futures market isn't making anything better, with futures, just obviously acting very wimpy and selling off. Sorry, that's Ethereum. Let me go to futures. Yeah, so futures is acting wimpy. But again, still staying within that range. So even if you were to trade this, you could still catch a nice move to the upside and downside. But again, you can use this on any ticker. I believe I use this on Nvidia. Yeah, so there was a bearish pattern. I've identified her range on her. She's obviously breaking down. This does look a little bit sloppy because I don't have it cleaned up, but you guys get the picture. Again, you would have identified the trading range on Nvidia. I believe I identified this range at first, and then she broke up. And then I identified this range, and then she broke down from that range. What supported that breakdown was a clear chart pattern, which was a rising wedge. So again, this strategy, we haven't used any indicator, no stochastic RSI, no EMAs. We're just using price action and simple math. So you're trading like a quantitative trader, using literally what you learned in high school and college and whatnot. Now, again, if you want to apply this on futures, there isn't any PDT, I believe, on futures. So you have room for error, if that makes sense. You have some room for error to, try this and give it a go. If you want to do that for the crypto market, there's no PDT on that either. So again, you have your room for error. So do give it a try, and do let me know how it works out for you. Again, the rules are to best identify your range. The 1 hour to 4 hour is a good frame. You want to take at least 3 days to a week's worth of trading history. And after you've identified your range, once you've identified the upside and downside, you subtract your upside range from your downside range, you're going to get a value. If you want to find out your upside target, you add that value to your upside range. And if you want to get your downside target, you subtract that value from your downside range. Now, once you get your both targets to the upside and downside, you're obviously going to have gaps between there. That's when you go on your weekly frame and you identify, okay, within those targets, where are the support and resistance? And I like to use wicks and bodies that make sense, that look visible to the eye, because I know, okay, if I identify it there, price should be catching itself there if I'm trying to day trade it or swing trade it. Now, the only reason why I say this works is day trading and swing trading and not just day trading, because again, if we look at AMD, I didn't think that that AMD 59 trade would actually hit. I didn't think it would hit the same day. I honestly thought I would have to swing that trade, but obviously the trade just, luckily hit same day. So I was in and out of that trade in a day. But, if it even consolidated here, I would have probably swung it into the next day, trying to capture that 59 touch. But again, I hope this method worked for you guys. If you guys do decide to implement it, it shouldn't be too hard. You're just identifying trading ranges and doing some math. The math or the market moves on numbers, so you can't go wrong with the values that you get if you identify your ranges. The best way I've found to help is if you do want to identify your weekly support and resistance first, you can do that, because then within there, you'll be able to see, okay, at what weekly levels is price trading around. And then you can just change those colors to now say, this is my implied range. And then you can go about from there. Uh, I really hope this helps you guys. Thank you.